Welcome back. It's turning out to be quite a pleasant morning. Lots of earnings reaction on the street. In fact, most of the counters that have been making big moves this morning are on back of earnings. Talking about earnings, Zensar Tech also reported numbers yesterday. And we have with us Manish Tandon, Chief Executive Officer and Managing Director of Zensar Tech, joining us. Manish, good morning. Thank you very much, Mr. Tandon, for joining us this morning. First up, how do you feel? You've reported numbers. It's a little bit of a mixed bag from the way we look at it. But take us through those earnings.
No, we feel very, very good about our earnings, except for one particular area in our business, which is the high tech vertical. We have done very well. I think this being a seasonal quarter, it's better to compare year over year performance. We have done about 18% growth in South Africa, about 12% growth in UK, about 13% growth in banking and financial services sector. Even consumer and retail has grown 7.7%. All these are year over year numbers. And our profit has actually, our PAT has grown 108% as compared to last quarter. So we are overall pleased with the progress that we are making. Unfortunately, because of the wide and deep furloughs in the tech sector, a lot of this has been washed away. And as you all know, we have a significant exposure to the tech sector. And hence, we are seeing this downdraft. But otherwise, even the order bookings, etc., are up 30% year over year. So we are pretty pleased with our performance.
So, Tandon, let's take this one at a time. And I want to talk about your margins, because those have actually come in pretty decent, if that's the right word to use. Lots of operational efficiency as well that's at play. Going ahead in terms of an outlook on margins, can we expect an uptick on margins? Because there's only that much more you can push in terms of operational efficiencies. So what I want to understand is, would you be getting better deals with better margins? Because that's exactly really what happened in 2022 as well, when the industry as whole was seeing lower margins but better business.
I have always believed throughout my career that margins is much more about execution than about the price at which you are selling. You have to price to the market and execute to margin. And that is what we have been doing over the last 4 quarters. And to your question, we want to maintain mid-teen margins. Currently, we are higher than our expectation of mid-teen margins, which is a good position to be. It allows us to invest in business growth going forward.
Mr. Tandon, is deal making a concern at this stage? And this, of course, we've seen industry-wide as well, so it's not very specific to Zensar alone here. The value of your deal wins was actually, or rather is more than the total revenue in dollar terms. Is conversion of deals into revenue slow at this stage?
No, actually, we are very conservative in reporting our order bookings. Actually, we report our order bookings based on the SOWs signed. So it is not about saying that, okay, potentially this deal is a framework deal which will give us 100 million over 5 years. We don't do that. And our book-to-bill ratio typically is 1.2 or so, and which is what we are seeing this year also. Deal-making environment remains the same. I think Q3 or this Christmas, November-December quarter is not very good for deal-making, because pretty much from Thanksgiving to first week of New Year's, people are away. And yet, we have seen good growth numbers as far as deals are concerned.
Talking about revenue and deals, this is the time when clients are firming up their budgets for the full year. How have your conversations been with clients? What is the demand picture looking like? I mean, on-ground reality.
I don't think the demand picture is looking any different from what it was in 2023. I think, if anything, whatever reports I've been reading and what I have been talking to clients, it is going to be a tougher year as compared to even 2023, is what I am being told by our clients and the various analysts that I'm talking.
Tandon, then what does that mean for business? If it is going to be tougher, and I'm so glad you say this as it is, because the markets have been getting excited, expecting that the worst is behind the IT sector and an uptick should be expected, completely ignoring the fact that the US also goes in election next year, and we're still not done with the recession talk in the US. If demand picture is not going to see a material difference, operational efficiencies and execution is already at its peak, where do you think growth for the sector, for your company, will come from in FY25 then? What could be the triggers that we should be tracking now?
Yeah, I think I would not comment on the industry, but I would comment on Zensar. And our strategy has been that we have offered a whole new slew of services which are doing very well in the market. What that does is it increases the addressable spend that we can go after. So even though the market size might be shrinking, the addressable spend for companies like Zensar is increasing, and that has been our strategy to counter the downdraft in the industry. Of course, we are 600 million odd in revenue, so it's easier for us to do it than some of the larger players who have billions of dollars in revenues.
Mr. Tandon, high tech in the top 5 clients, which of course contribute to your top line, some brokerages believe could be a little bit of a drag for the company. Give me a sense of outlook into the next quarter and FY25 as well with regard to the high tech vertical and your big 3-4 clients that pull in the revenue for you.
I don't want to comment on individual clients, but top five has come down, and we are, and obviously a lot of those accounts were in the high tech sector because that is the only sector which has degrown. Outlook, as I said, the overall outlook remains the same as 2023 as far as high tech is concerned. In fact, I was just reading last week that even Google has let go of a lot of people, 1,200 or 12,000, I don't remember. So but I won't say that the prognosis is very good for the sector. And it's not going to be different. The only point is, have we bottomed out or not? And it's very difficult to comment on that as of this stage.
Mr. Tandon, another quick one. Give us a picture of employee and headcount. I mean, that clearly usually is a lead indicator for your sector. How is headcounts looking? Are you hiring at this stage? What do attrition stand at? Just a little more light on that would be useful.
Yeah, attrition is only 12%. It has come down from 13.1% last quarter. Our Glassdoor rating as a company has gone is the highest. It's more than 4. We added 565 gross additions were 565. Net additions were slightly negative, and that is in line with how the revenue has been doing. Our utilization has been going up. And now most of the new demand that is coming in is being filled not from existing bench resources, but from hiring new people and bringing in fresh talent.
So Tandon, just one quick last question, if I can, ask you in terms, you've of course been very candid and told us the way things are at this stage, but in terms of geographies, your US business is down about 3.6%, UK, Europe is off by about 2.5%. Any new geographies that you're focusing on? Is emerging geographies something that the company is bullish on? I mean, internally, what are those conversations is what I really want to know. I know you're not the sort to overcommit and underdeliver, but just give us a sense of, internally, what is the plan?
Internally, the plan is last quarter, which is Q2, we started the healthcare and life sciences verticals. Healthcare and life science vertical. So we are building out our team there. So that is one area that I am very excited about. If you look at most of the companies they have shown a growth in the in the healthcare and life sciences vertical. And I have a significant background in that vertical, so I'm very excited about it. As far as geography penetration is concerned, we are doing very well in South Africa. We have a double-digit market share there. We are doing pretty well, very well in UK and in Europe. I mean, South Africa, the volume growth was 18%. If the currency had been stable, we would have seen 18% year-over-year growth. And Europe, it is 18% in stated currency, but about 12% in volumes. So we are. I am not too eager about penetrating newer geographies. Basically, we will go where our clients take us. So if a client says, for example, there is a client who wanted us to start a center in Colombia, and last quarter we just did that. We started a new Colombia center with about 65, 70 people. So we will go where our clients want us to go.
Right, Mr. Tandon, congratulations and good luck with business going ahead. That is Zensar management charting out the road ahead for the company, talking about how they have actually managed to grow geographies like South Africa. They are focusing on life science and healthcare, like Mr. Tandon indicated. Numbers were largely in line with expectation, but of course, some concerns will remain as the demand outlook is still not showing a material impact, not just for the company, but for the industry as a whole. In the meantime, the markets are looking good. It's a pretty solid